Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So, what kind of markets we had was the bears that is defending. Markets got sold off in the afternoon. Big selling happened and the bears did the job well. So, let's see what exactly happened. So, the pre-market analysis as usual is for the next day, March 16th, Wednesday, 2022, tomorrow. And we'll be doing that based on all of these parameters that you see on the left side on the charts, and you'll have additional data analysis on the parameters that you on the right side. We'll have some action and then wrap up. So let's get on the charts and see. So we have a wide range bearish candle, right? Hit a resistance zone and then gave up. Here it's kind of a bull trap, right? It went above the previous day's high and then trapped out the bulls and then went down and closed below the previous day's high. Same thing happened. So a bull trap is what happened, right, in both the indices, the Nifty and Bank Nifty, with a clear bearish signal, clear selling pressure hitting the resistance. When you go to the next slide, so intraday, this is what happened, right? So it did a small gap up and then went flat till 12:30 and then big sell off happened, big, and then a recovery attempt to the last hour. Same thing, slightly gapped up, consolidated a little bit, big sell off happened, and then last hour recovery happened. That's intraday price action. So basically Nifty lost 1.2% from the 7.6% or something that had gained. So 208 points lost, quite bearish candle. And the main thing is it gave up the 20 DMA, right, after a 5-day stay, and still below the 200 DMA and trapped in the window gap. Bank Nifty also 0.83, nearly 1%, 289 points lost. Bank Nifty was showing rather more strength than the Nifty today. It also formed a bearish candle after 5 days of recovery, right? 10% of recovery had happened, or gave 1% of that, less than that. So it's okay. So still it's below the 20 DMA. So now both are below the 20 DMA, and 200 DMA also is below that. And then the gap resistance, it's also having a gap resistance on the upside. We are in a trend line channel with a double top end pattern that is being found on a weekly basis. You'll be seeing that in this next slides. So intraday price action we already seen. It was very volatile, right? Slight up move and then flat and then breakdown and then recovery attempt, right? So Bollinger Bands are still highly volatile. The width between the bands and the median is high, so that's why market is very volatile. Same with Bank Nifty also. But you can see that both bands are now consolidating, sideways movement. So the breakdown has paused, that is for sure, but volatility remains there, right? Support resistances, if you see, you can clearly say this is a gap. That box that you see is the gap. Here the box that you see is a gap. It's far away from in the gap, but Nifty caught in the gap. So the immediate resistance would be here at 16,750 zone, 700, 750 zone, and then above that 16,800, 16,900 Fibonacci 38 level where it got hit and got the pressure, selling pressure. Above that you have 70,000, 17,50 where it will be clear of the gap. Resistance above that is 17,200 and 17,300, then 17,350 to 17,450, then finally 17,500, which is the Fibonacci 23 level, retracement level basically. Support zone side would be, the immediate support would be 16,450, 550, 650, that level. 450 also is a Fibonacci 50 retracement. There is a gap support also that is there somewhere here, at least between the 350 and 450. There is a gap that is formed when it moved up the recovery, so that is also a good support zone. And Fibonacci 50 also is good. Support below is 16,200 and then 15,900 zone. Fibonacci 61 is a major support. Is also happened here. After that you have the swing low basically. After that you have the 15,500 zone where it had made the basically the swing low. Similarly, the Bank Nifty, if you see that it is facing the resistance at 35,600 zone. Below that 35,000 also is a major zone where it is facing resistance. Fibonacci 20. It could not sustain that and it fall down below that. And now the supports below is that resistance above. We have 35,900 zones, 35,600 to 37,900 zones, and above that 36,300 to 800 Fibonacci 38 retracement level also is coming in. Then you have the gap at 37,000 euro zone. So once the gap is filled, you have 37,500, which is also a Fibonacci 23 retracement, right? So 37,500 and 17,000 is what you have to watch whether it's able to move above that. That would be a clear indication that there is a possibility of an up move, right? Similar downside levels. So making note of these levels on both indices. Momentum and divergence. Momentum is is sideways on the Nifty and sideways on the Bank Nifty. So remains there despite the fall that happened today. And medium term also it's sideways, right? Now there is and medium term, the thing is it is taking a support of the RSI 40, which is kind of more bullish, bullish indication from the momentum perspective. Divergence, nothing is there as of now. Divergence had yesterday met the target of 16,790 on the Nifty. It was a bullish divergence that has worked very well, but now as of now there is no divergence that is seen. Trend remains to be bullish in the Nifty. Yesterday it has crossed over. Bank Nifty also does not crossed over, but on the edge, it could be a crisscross here, like crossover happened, just managed to be on the bullish on the trend side of the short term, but it remains to be bearish on the longer, on the medium term on Nifty and Bank Nifty both, and there is a rising strength in the bearishness also. That is something difficult about, but short term the trend has changed to mildly bullish, you can say. Volatility, the VIX has shot up slightly, 4% up, more than 26.73. So it's not ready to go below the 25 levels and reach the 20 below. That's not going to happen as long as the war is there, right? War fear and is there in the market, right? But volatility is 28.3, it's high. IBP is also very high. So anything about 26, you have to be cautious. Open interest analysis, if you see, this is for expiry of day after tomorrow, March 17, 2022. Range is very wide because volatility 16,000 and 17,500 is where the option traders have written the maximum number of puts and the calls, supports and resistances. After that, you have 15,500 to 17,500, 15,500 to 70,000 range. So such a wide range volatility is there. That could change. You have still tomorrow. Tomorrow it will be clear how the expiry. It will make more sense. And Bank Nifty is 34,000 and 36,200 pound range is where the high support resistance is seen on the open interest of options. 33,000 and 36 is in the second level of support resistance. Let's say put call ratio is not bullish enough, 0.63 on Nifty and 0.77. I just at least want to be bullish. Now open interest of futures build up is showing that it is a short build up that happened definitely, and it is long unwinding, which is also bearish. People unwinded their long positions and then went bearish. So that's what the open interest data is saying. So make note of these levels and correlate them, match them with their support resistance that we have seen earlier. Yes, red all over there. Big sell-off happened, and none of sectors performed well except auto and cement. Otherwise, it was bearish. All the heavyweights. HDFC and Reliance is not doing well. Market will not do well, basically. So index heavyweights, if you see, HDFC Bank maintains its sideways momentum, and it was in the up move since last many days, but closed red today. It is on a trend line down trending channel after slipping from the major support zone. It is also showing it was also trying to climb back to support zone. Momentum remains sideways but closed red. HDFC. So both HDFC and HDFC tunes sideways momentum and red close. Lions also had a red close today. Sideways momentum is maintained, but it is on the edge of a channel. Infosys also was climbing up with great momentum, but it is now taken a step back and slipped basically at a support of the momentum at RSI 60, you can say. With the momentum remains to be bullish, but red bearish sell-off is what happened today. This is also a red sell-off. Momentum is remaining the sideways. ICICI Bank momentum remains sideways but red close, and it is on the way to the resistance major zone on the upside. Kotak Bank has slipped and made a big red, and momentum remains sideways, and that big red is approaching the previous support zone again. So all the multiple days of up move attempting to bounce up from that support zone has turned out to be good for nothing when it slipped back to the same place, right? That's what Kodak Bank is. So overall, if you see, it was a bearish day. All sectors sell-off has happened, but momentum in all the heavies remains in the sideways. IT also managed to just be there on the bullish zones, but it's an unexpected sell-off that happened today, right? Otherwise, it was across the board sector-wise, selling that happened. So none of the IT sectors performed well today. Sector-wise performance, IT gave up 2.5%, right, and slipped from the full sector. If you see, it slipped to the sideways now. IT was bullish yesterday. Metal also was bullish. Now it fall down 4% and moved to sideways. Auto gained, only sector that gained is 0.5. Now half a percent of gain has happened and it is climbed back to the sideways momentum. Pharma is 0.5 down flat, momentum sideways. FMCG 0.1 flat, momentum sideways. Realty 0.3% flat, momentum sideways. So one thing, good thing is that all the sectors are sideways now. None of them is bullish, none of them is bearish. Right. So we'll have to wait for that to catch up before we can have any approach of picking up stocks on the best on the most strength sectors. It's not possible as well. The institutional participation data yesterday also selling happened, but very relatively less selling happened. But that must have been compensated today. Today's data is not available yet. But yesterday also DAs were buying. So we'll just quickly check whether data is coming today or not. 15th March data is not coming. So let's go back. So most likely it will be at least a 2,000 crore of selling from the Fyers might have happened definitely. And domestic institutions must have also attempted to buy equivalent amount, but definitely less than what the Fed said. So is why the market is falling down. Now dollar rupee is weakening again. Rupee is overall weakening, but today it must have gained slightly. But it's above the channel top and it's above the all-time high level of 76 and 0.43. Although still the bull zones and anything can happen, can go further up. And the dollar index also kind of slightly cooled off today, but momentum is at the bullish zones and it is heading towards 99 level. So no bad times for the rupee. But the good news is that the crude oil has fallen 26% from the top and it's very good, and this momentum has slipped in the sideways zone. So trend also has crossed over in the short term. So that is a good thing. Gold, by the it has fallen back to the same place where it has broken out from. So gold has cooled off, and momentum of the bullish momentum also gold also was very short-lived, and then it could not sustain at the all-time high levels 2074 that level, although it cracked the 22,000 price point, but it could not sustain and fall off the momentum. Global indices, if you see Dow Jones, across Dow Jones is clearly showing bearishness. It slipped off from the major surrender zone, managed to be in the sideways zone, hanging on there, trying to climb, but it is bearish overall. These levels are to be seen next day morning before pre-market, to be precise. This is the latest data that charts I have pulled out from. Nasdaq also slipped and taking the support of the previous support zone. S&P 500 also is taking it's fallen off and at the edge of the channel and just trying to hold down at the next support zone. So major supports are all given away ahead of the Fed meeting that is going to come on Thursday morning our time, Indian time basically. So basically selling pressure is same, bearishness is clearly visible now. Markets are trying to hold on to the sideways momentum, but it is slipping off slowly and giving up the major support zones. So that's worrisome. And two actionables, Tata Consumer Products, it was trending up and then this channel trending down and just broken out from the channel with great momentum, great volume, and trend crossover, momentum crossover, everything has happened. So it could give a potential. There is immediate resistance at 781. So make the entry only if the alert candle, if there is a price move above the previous alert candle is high, right? Only if the price moves above the previous day's high, then we should take a trade. So it can give good swing if it is moving further up from the 781 levels, right? Another one is Cipla Pharma. Cipla is having a breakout from the rectangular pattern. It is having bullish momentum, great volumes, and the trend also is bullish clearly. So that is also happened to be a weekly call on my weekly video. So these two are Tata Consumer Products Limited and Cipla, both are long. But you'll have to take it only after a clear indication or signal of a price that is above the previous day's candle, right? Because retracements can happen, the breakout has already happened, it may consolidate a while before hitting on the next resistance. So that would be the time when you have to enter. So to wrap up with the neutral mild bearish is the short-term view, right? And the reason for that is the chart patterns that we discussed till now. Support resistance levels and sideways momentum, the crossover to the trend, the Bollinger Band contraction, sideways, all this combined together. My view that I see based on all the parameters that we discussed until now, I conclude that it is neutral or mild bearish, but that will not be your case. You can have your own market view. Market view comprises of understanding all the different patterns and indicators, momentum, price, volume, all these things combined, you come to a conclusion. That can be wrong, that may work out well, you never know, right? But definitely you should have a view when you're taking position. So this is my view. If it, it could differ. So overall, you can see that the market had records 1.5, 1.2 is given up today again after last 5 days of up move. It gave up the 20 DMA also. It was basically caught in a gap resistance. So it could be a small pause before further up move. Can be that also. But remember that there is an overall sliding trend line is there. Double top pattern is there. The Fyers are continuously selling every day, right? And we have the war cry, the war and peace talks, volatility heavy at about 26 levels. US Fed meeting results are coming on Thursday. Means meeting outcomes are coming. FIs continuously selling. So these are all reasons for clear volatility. Anything can happen. So technical analysis may not work out as we expect. But certain levels, probabilities, possibilities, all we can talk about. So 70,000 above close is good. 37,500 above close is good for Bank Nifty. Means basically about 200 EMI can be considered to be a continuation of the otherwise it's bearishness. Very simple. Until then, markets will be choppy. So positive factors are less. 7% recovery happened is very good. In spite of all this war and the global negative news that is there, still we could recover from the bottom. So that means buyers are there, that's possible. But as long as this war uncertainty is not gone off, we will have trouble. We'll have volatility in the market. So stay away from the market if you're a novice, and if you're an expert also, have hedge positions, balance your long-term investing portfolio with gold and other hedging strategies. Buy quality stocks in they have dips at a good price. An option strategy is always use risk-defined strategies only, and take counter spreads or double counter spreads or risk non-directional strategies. And number of videos are available. If you don't know, in the playlist you can go and check those strategies. So take hedge positions so we know what is the defined risk. Intraday very difficult. Today also we had V-shaped moves multiple times. So trade cautiously when the volatility is very high. Big sell-off happened at 12:30 suddenly. Big 1.5% just in 1 or 2 candles. So that's the kind of where market is moving. So we have to be cautious at this high volatile environment. And that's my view. Neutral to mild bearishness is what my view. So if that helps you to frame your view and your trade for the next day, consider hitting the like button and share to your friends and colleagues. We have very few subscriptions and your help in this regard will much appreciable and motivating. Thanks. Happy trading, happy learning. Bye.